welcome everybody. My name is Jason Sisneros, and welcome to another episode of the Built to Exit podcast, where we talk about all things exit. I bring you amazing people. We have amazing conversations. You know, you're used to it. You've been with me for years. You've been sharing the show, which I appreciate. Our audience is growing on all of the channels, and I think we're having a good time, and we're impacting some of these numbers. The conversation that we're going to have today, this gentleman and I were introduced by a mutual friend, and I went on his podcast. We had a great conversation. And as you know, I'm very selective about the people that I bring on my show. Matter of fact, Ty, just so you know, you're only the third person that I've had on my show in the last 6 months. So welcome to you. I was really impressed with your knowledge. And I think that the information that you're going to give us and your expertise is something that always in business is important. Cash flow and credit and, you know, all that kind of, it's always important, but I think it's even more important right now for you to give them some strategies and for us to have that discussion. But welcome to the show, Ty Crandall. Great to have you. And he is the CEO of creditsuite.com. You don't even have to really go, how do you spell that? It's right there on his shirt. So you can just go there and check it out. But Ty, welcome to the show, brother. Tell us a little bit about yourself, and we'll get rolling.
Thanks, Jason. I'm excited to be here. I'm actually really honored to be here. I had so much fun with us together on my show, so I'm really excited to be here. And like one of like 3 people in 6 months, that's even more of an honor and a privilege. So I really appreciate it.
Awesome.
A little bit about me. I mean, just, CEO of Credit Suite. That's really my passion. I just love helping business owners get capital. And that's kind of something we try to decode. I've been around now for, I think we're at 11th year. So been around for a while. And that's a submission that really, means a lot to me personally. It's just, I've experienced, I'm sure you have too, the struggles of trying to get money when you really need it, and which seems like the time that lenders will not want to give you money. And so decoding that whole system of, what they look for, why they're turning us down, the stuff that they don't tell us, and then being able to help somebody actually understand that and then make it easy to access capital is something I just love to do.
And why do they want to give it to me when I don't need it?
Yeah, exactly. That's what it seems like. Well, I mean, look, anybody wants to give a business money when the business is really healthy and it's profit, money's bursting at the seams and you have a ton of money in your bank account.
Yeah.
But like
never when you need it.
Yeah, totally when you need it. Yeah.
Awesome. So tell me a little bit. I'm always fascinated by what gets somebody interested or involved in the line of business that they become, that you become interested in. They become not only interested in. You're at the top of your game. Like, you're very well known. People trust you. That takes a long time with any business. But why this business, and how did you get your start?
So essentially, the first company I ever owned was a mortgage company, and quickly built it up to a 7-figure business. That was right when the whole mortgage industry collapsed. So I was doing jumbo loans at the time. I mean, literally overnight, what I did went away, and I saw what it was like, and the pain to experience, to build something successfully and then watch it fall apart and dismantle it, having to let team members go, walking away from leases, defaulting on credit cards and debt. So it was a really painful time, and at that point, I made a pivot and decided that I was going to get into consumer credit. It was just this weird thing. It was like it was the moment where I kind of stopped doing business for money and stopped doing it just because I wanted to rescue other people from the pain that I'd experienced. So a lot of people's credit was just trashed at the time, including mine. Mine went from great to bad really quickly. And so I jumped into consumer credit space and started helping business owners with that. And then somewhere along the way, people started to ask me about business credit because we were really good at what we did. And I didn't really know anything about business credit. So people kind of ask, and I try to Google the answers in real time to give them some kind of reasonable response. And then, late last night, one night, I just kind of was sitting there, and enough people had asked me where I decided to dive in. And what I really realized is that if I would have had business credit, it would have saved me from near personal bankruptcy on the personal side. When the business failed, I personally guaranteed a lot of debts. I was tied to a lot of things. And they literally, I'm the guy that they came and took it out of my bank account. Like, money was there one day, and then it was all gone. And then all the checks bounced, and it was negative, and the whole thing was a disaster. And I really realized that business credit would have prevented all of that. And I'm thinking, man, I'm I'm a financial guy. I've been a financial guy for a long time. I never even really knew how all of this worked. And so then I just started obsessing about it and learning. And then as I learn, I teach, put it on YouTube and learn to teach. And then I wasn't really paying attention to what was going on. And I think months and months into that, I think the first time I ever looked at my subscriber count, we had a lot of people following what was going on. And I just gained such a passion for it that, sold the consumer credit business, went all in, and then started building software and solutions. That's 11 years ago to bring me to where I am today.
Wow. Yeah, it's crazy. You as you're flashing through that, I know exactly that feeling. We call it here at Built to Exit. There's 3 types of exits, right? The one is involuntary. And that's what I had, 3 of those babies back to back to back, no business credit, I really didn't, like most business owners don't take the personal responsibility to get to know the language that their business speaks, which is numbers. And I'm always cajoling. I'm always, trying to lead business owners. If there's one place that you could really jump in, and not necessarily that you have to do it all or be the bookkeeper or understand it all, but it is worth your time in gold for you to understand some of the things that Ty's going to tell you today, for you to reach out to him, watch his shows. He's got some really, really foundationally strong educational pieces of information that you can go when you go to his podcast and see what he has to say. And obviously you can always just pick up the phone and call him and get some information from him. But that what you're trying to avoid is that first kind of exit, and which is very painful, and it's hard to come back from. And like you said, you wake up, everybody's like, well, I don't want, it's involuntary for a reason. You didn't choose for them to come and empty your bank account that day. None of us choose for our sole source of revenue, for most of us, right, to be able to be shut down. So what is, and as far as it comes to business credit, because it's not a well-known concept. Even though it is so powerful, what's the biggest misconception that you find people have about it?
That's a tough one because there's a lot of misconceptions, but I think one of the biggest is that we're used to, in a consumer world where, if I go to Target and they offer me a credit card upon checkout to get a 20% savings, and I get that credit card, it's going to report to the consumer credit reporting agencies. I know that. So by default in our lives, we just build consumer credit because 90% of the credit reports to a credit reporting agency. It's the exact opposite of the business world. 90% of credit in the business world does not report to a reporting agency. So I think I see a lot of very established entrepreneurs that, get to a point in their business where they're trying to get loans, credit lines, SBA. They get denied because of business credit. They get freaked out. And what they realize is they don't have any. They're years into it. They thought they got credit with this company and this company and this source and this source. But what they don't know is that credit's not reporting 90% of the time, and they don't have established business credit. And then as the business gets bigger and their appetite for cash and needing larger amounts gets bigger, then they're out there trying to get it when they have no credit profile for the business and find out that it's near impossible to get, or even worse, they get credit and they have it pulled back. Credit lines canceled because they don't have established credit, which makes them a higher risk. So I think it's one of the biggest misconceptions I see.
Got it. So knowing that, as people are watching this, having that realization, what's the first step between, for the business owner that's watching this to start to separate personal and into business and start to establish that business credit footprint?
Well, I think, the first step anybody should take when it comes to getting capital is one that we oftentimes skip, which is understand that credibility is really one of the biggest and most important currencies from a lender's perspective. So somebody should look through and make sure that their business really reflects that they are legitimate and credible. They should have, if you want to separate consumer and commercial credit, your business needs to be separate from you. You can't be a sole proprietor. You need to have a separate address for the business. You need to have a separate phone number for the business, a website, a professional email address that's not a Gmail or a personal type of email address. You'd have a license for the business, even if you get it in your county, a separate bank account for the business. And then most importantly, all of that information needs to be congruent. It's interesting because the number one reason that financing and credit is denied for business owners, and this accounts for well over 50% of denials, is because the lender actually thinks it's fraud. So what happens is what they're dealing with is not legitimate applications. We don't even think of it that way. So when they go and they, try to pull your business records, and your Secretary of State's a little different than the IRS, and that's a little different than, your bank account. You had an address you didn't change and a phone number that those are all red flags, And so what happens is then a lender can't validate that the one that you are applying is the same one they're finding elsewhere. And that accounts for more than half of all denials for credit financing. So once you build that credibility, that congruency is really important, making sure anywhere your business is listed online, your social channels, your website, your application, your Secretary of State, your IRS, your bank statements, everything, that information is the same. Your business is spelled correctly, your address, your phone number. And I'll tell you, Jason, 90% of people that come in as clients, they just don't have that right. And they think they do. And they come in and we do very basic checks. And 90% of the time, that's what's getting them denied. And we fix those little things. And then they're turning around, taking what was formal denials and turning them into approvals. So that's really the first step of getting any kind of capital, is making sure that stuff's in line.
I love that. It aligns with what I've been teaching for years, which is this simple concept of I am not my business is not me. Right. And we get so, as business owners, where you separate, we put so much of our heart, like your name is behind Credit Suite, right? My name is behind any number of businesses that I do. And that is the establishment of what I believe is the most important brand, which is our personal brand that gets built over time on how we treat people, how we do business, whether we tell the truth, whether we live up to what we support. That's a personal brand. That's not really what the bank is going to call and check on, but it is what your business is being built on. Okay. Now, what most business owners make the mistake of is that their business is them. And that starts to intertwine not only psychologically bad behaviors, but also physically and behavioral bad habits. Using it, like you said, like a piggy bank, right? They're using it. They're paying their personal stuff. There's a whole lot of stuff there that you want to separate from. And in terms of exit, what we teach people, I'm not my business isn't me. Forget the psychological stuff. Nobody's going to buy your business if you're necessary in it. So what Ty's talking about here is really incredibly important in one of the 4 boxes that we talk about: relationship to your customer and transparent financials. In that box particularly, and then having your own, having a leadership team that doesn't need you, and then your exit plan. So what Ty is that box on the financial literacy. You start to have conversations that separate you. You start to put the business in a place where it's establishing its reputation in the marketplace. And I think everybody that's watching this should call him immediately, have a conversation, and start that process for yourself, right out the gate. Because I know everybody that watches me, there's no reason why they would be watching me other than they like good-looking bald guys. But yeah, exactly. But they're not watching me for just standard stuff. They're looking to say, hey, how do I get my business optimized? And then ultimately, how do I exit my deal? So this is one of those areas that I think is super, super important. Are you a business owner running hard, burning out, and still not getting ahead? I'm Jason Sisneros, founder of Built to Exit. I've bought, built, fixed, exited over 24 companies of my own. I've helped hundreds of business owners do the same. If you're listening to this podcast, you probably didn't start your business to be trapped in it. And yet, here you are, overwhelmed, underpaid, drowning in noise from fake gurus and recycled advice. Been there. Built to Exit isn't just another course. It's not a magic bullet, it's a system, a proven blueprint built from real-world experience, not theory. We help owners control the 3 things that really matter in business: price, the timing, and the terms of your exit. Whether that means more cash in your pocket now, more freedom starting today, or a full-blown exit strategy that lets you walk away on your own terms, our team knows how to get you there. So if you're done guessing, done with the excuses, and ready to win, visit builttoexit.biz today to schedule your free 15-minute strategy call with a senior advisor. We'll show you exactly where the leaks are in your business and how to fix them, because everybody exits. How you exit is the only thing that really matters. Built-to-exit.biz. We play to win. Do you? So my question was, what are the 3 best steps that a business owner can take to establish and build strong business credit?
So I think the very first step of building business credit, we've already talked about. You've got to make sure that that business is set up where it's credible. The second step is you have to get initial credit. Business credit building, as we talked about, the biggest misconception is that it doesn't just happen naturally. It's just not like consumer credit. You have to be very intentional about building business credit. And there's really a few different ways that you can do it. The first and most common are just using what are called starter vendors. And this is a good way to go because you can get credit without personal guarantees, without personal credit checks, like your credit quality, your cash flow, your collateral, none of that matters. And there's sources like Granger, for example, or CEO Creative that are out there. Uline is another one where these sources will give you credit when you have none, as long as you set that business up where it's credible. But then they also report to a business credit reporting agency. So you're actually able to build your business credit while actually getting credit that your business can really use. Now, another way to do it is through a program called Credit Line Hybrid. You can easily find that online. And this is a credit card stacking program where somebody can come in and use a personal guarantee and use good personal credit to get upwards of 5 or more credit cards that they could pull cash out at, even at 0%. But a lot of those credit cards report to a business credit reporting agency. So it's a great way to build initial business credit there if you don't mind the guarantee and the credit check at the beginning. And then Dun & Bradstreet has a great program as well. They have what they call Credit Insights and the Credit Insights Plus program, where you can actually take accounts you already have, like your CRM payment that you pay, that don't report to a reporting agency, and D&B can help you then add those to your actual D&B credit report. So it doesn't really matter which path you choose, but you definitely want to choose a path and get at least 3 to 5 of these kind of starter vendors on your business credit reports. That will establish the scores. That will actually get you established credit profiles with each reporting agency. And that alone, with Equifax and Experian, could take you from bad credit, because you'll be given bad scores if you have no credit, to having good credit just because you've established some credit with them. So that's really the next step in that process, is to get some initial credit on the business credit reports.
Love that. Love that. And in terms of acquisitions, because really, this is, at the end of the day, our game is M&A, right? It's people looking to sell their businesses, people looking to acquire businesses. My wife and I, we're on both sides of the equation all the time, with depending on what business we're talking about. When it comes to credit, have you seen anything? And the answer may be no, but have you seen a business go for more money because it had good business credit versus those that don't have that built up? Is there an application in your mind that would help the people that are looking to either build their business to exit, or they're in the acquisition game?
Without a doubt. I mean, the 3 biggest educators and teachers of how to actually acquire businesses, we provide the educations for their tribes, right? So I sit on those stages and teach them, and they bring me in because I'm teaching their tribes how to pull business credit reports, how to navigate business credit reports. It's interesting because what they're doing is they're using business credit reports to actually determine acquisition targets. So they're coming in and doing research to even discover, is this a business I want to buy? And they're incorporating business credit reports into that decision making. It's interesting. I saw The Profit, which I love that show, and was on with Marcus Lemonis. And I've seen him do the same thing. I've seen him actually have questions about what one of the business owners said, go home, pull a business credit report, come back, confront the owner, and decide not to buy the business based on what he found. But that's real. I mean, that happens all the time. Now, also when I have business brokers on my podcast, and we have a lot of them that refer us business as well, they're doing so because they all say the same thing. Business credit is really essential into getting maximum value of the business for many different reasons. So from their perspective, and anybody I've talked to on that broker side, it's invaluable. And common sense wise, we can kind of figure it out. If I have 2 businesses that are side by side in the same industry, and one of them has a $500,000 worth of available credit when I'm walking in the door, because business credit, it stays with the business. It's not linked to the owner. It's no credit check, no guarantee. I mean, it transfers over, versus the same business that has none. I mean, it just, overwhelmingly the business that has $500,000 of access to credit is more valuable than the one that doesn't. So yeah, it's definitely a very important factor to getting the maximum value for a business when you go to exit.
Love that. Yeah, it's such an important thing, and I sit back and I love listening to you because people are going to go, "Oh, that's brilliant information." I've been saying it for 10 years, to my clients, but you know how it is sometimes, right? It's like, "Oh my God, I can't believe Ty came in here and said that thing." And I'm going to just be like, "Yep, absolutely. That was a genius piece of advice that he gave."
Yeah.
But yeah, it is really, really important. What are there, because I know this world that you live in, and you're doing, I want you to talk about your relationship with DMB and, and how you do that. But I want you to talk a little bit about the red flags, because there's a lot of predators. I consider myself a sell side advocate, as I talked about on your show, and I don't think there's many of us that are out there that truly have the business owners back. Um, I think everybody's in a hurry. I think most of the brokers are in a hurry to make their number. I think most of the, investment bankers are in a hurry to make their number. And I think that the tool and the people that get caught off guard the most are the business owners. They're so busy. They're handling literally everything and they don't know who to trust. They don't, you know what I mean? It's a difficult path to go down. So in this world, what are some, three top red flags to let a business owner know, hey, you're going down the wrong path with the wrong people on your credit, lending, et cetera, et cetera?
One of the best things and piece of advice I can give anybody is go type in LexisNexis, just like it sounds like online, and get a free copy of your LexisNexis credit report. I will tell you that over 9 out of 10, people that I talk to that are high level entrepreneurs have never even seen their LexisNexis credit report. And LexisNexis is the root of all evil in many different areas, especially lending. So this is a credit report that we don't usually know about. We don't usually access, but it's used by the government. It's used by law enforcement. So when they're pulling up every ticket you've ever had, they're pulling it all from LexisNexis, for example. Mm-hmm. It's used by lenders, by credit issuers, by insurance companies. And your entire life's history is on this report. I mean, my report is 300 pages. I mean, without exaggeration, it's a book. When you get it, it's the most intrusive thing you'll see in your entire life. Yep. All the things that you thought that nobody knows about you, the mistakes, the things that were in the past, they're all there. I mean, every address you've ever lived in, every phone number, every email address you've had, your home, the building materials of the home, how many stories your home is, how many AC units you've had. I mean, it's crazy. Every vehicle you've ever owned, the VIN number of every vehicle, insurance, it's your entire life's history is on there. And so people think they have a judgment or a collection or a bankruptcy, and in 10 years that drops off consumer credit, which is accurate. But indefinitely it stays on LexisNexis. When you're disputing with TransUnion to try to get something off there, well, they're verifying it with LexisNexis. That, if you went and disputed it with LexisNexis and removed it there, you'd have no problem getting the TransUnion dispute to go through. So your entire life's history is on that report. And what's happening is that's where lenders are doing their background checks. That's where, they're checking everything. Like, so for example, with SBA, I applied for an SBA loan and they came back. Have you ever been convicted of any misdemeanors and felonies? Jason, I'm a pretty straight shooter. So I was like, no. They came back and said, actually, you've got multiple misdemeanors. I had to pull a background check on myself to figure it out. And it all stemmed from, 20 years old, attractive female police officer I was trying to impress with wheelies on my motorcycle to get her phone number. Because I wanted to be a hero to the other soldiers. We all knew about this female police officer. Great story at the time, Yeah. But decades later, I'm trying to get an SBA loan, and like this thing comes up. I've well forgotten about that. I had not even thought about that. But it's just interesting on how many times I've had them try to collateralize my home for a loan because of a judgment that wasn't even real, that was on LexisNexis. And when I proved it wasn't and then had it removed, they removed my home as a necessity as collateral to be able to close the loan. That's like a really big deal. So LexisNexis, when you get this report, when you understand it, when you can start cleaning it up and disputing things, then so many things from bank accounts to insurance to loans and credit, so many of those things become easier. It's like the secret thing that all lenders are using that we don't know about. And it evens the playing field when you know about it. And then you can go through, dispute, and clean it up. So A couple others, but I'll stop there in case you have questions. But that's probably one of the most important things you could do to kind of even the score and have the best chance of moving forward to get capital.
Yeah, it's the first thing that we pull when we're going to when we're going to buy a company. If we're even thinking about buying a company, it's the first thing, if we're going to invest in it, if we're going to take stock in it, if we're going to represent, we do turnarounds, and that's my background is turnarounds, and that's not an easy game to be in. They're at the worst part of their life, and their business is about to be out of business, and there's so many things going on. It's a great report. No, I love that. I don't think I need to add anything to it. Other red
Another thing I'll add,
flags.
though,
Go ahead.
I'm sorry, just because you'd asked, is another thing to help in regards to that is something I call the 3 C's. And it's, lenders are looking for one of 3 things or multiple of these 3 things. It's cash flow, it's your credit, it's your collateral, right?
Mm-hmm.
So we talk about cash flow, we're talking about, depending, if you talk about SBA loans and term loans, they want tax returns, or bank statements if you want revenue loans. Then you talk about collateral. What assets do you personally and the business have that can serve up as collateral? Sometimes that's needed for the better loans you want. Mm-hmm. And the third is credit. What's your consumer credit quality? What's your commercial credit quality? So lenders are always looking at one of these 3 things. If you're looking at a merchant cash advance, all they care about is cash flow. If you're going to go get money based on stocks and bonds, well, all they care about is the stocks and bonds, the collateral. If you're looking at credit line hybrid, for example, or credit card stacking that we hear so much about, they're only looking at consumer credit. So they're only looking at one of these C's. And it's important to know because so many business owners have a C like credit, and they're trying to go apply for cash flow financing when they don't have the cash flow, or they're applying for cash flow financing when they don't really have the cash flow to qualify. Mm-hmm. So by clearly understanding that they're looking at one of these 3 things, and alternative lenders today are what we see as fintech lenders, which account for over 90% of the lending market. They really just want one of those. So if you know what your strength is, you can go down the right road to find the lenders that lend based on that thing. And then just know the more of those C's you have, you get yourself to the SBA loans that we all want. If you have good credit, business and consumer, and you've got good cash flow and tax returns and revenue that's growing, and you have collateral, then you're walking in and getting, SBA loans for potentially millions of dollars with very low rates. So it's another tip, and you'd ask for a few. So that's another tip, is just know where you are and then go down that lane. That will help you to find the right kind of financing depending on where stage you are in your business for what you're looking to get.
Brilliant. I love that. I love that. Super helpful. Hi, my name is Jason Sisneros, founder and chairman of Built to Exit, a world-class business consulting firm that's helped hundreds of clients and thousands of business owners fix, scale, and successfully master their companies. Let me ask you a question. Are you serious about changing the direction of your business, but you don't have the funds to bring in a high-level consulting team? Well, then keep watching. We created the Built to Exit system specifically for entrepreneurs like you. Whether you're a startup trying to avoid costly mistakes or a seasoned owner stuck in a plateau or a downturn, this do-it-yourself system is your answer. Now, this course isn't easy. It's not a gimmick. It's not sugar-coated motivational feel-good fest if you know me at all. It's a graduate level masterclass built from decades of business ownership, consulting, and real-world results. If you're willing to do the work and follow the blueprint we use with companies that pay us 5 and 6 figures, you will finally have a system that gives you time freedom, financial control, and a clear path to a successful exit. So if you're serious about building a business that works with or without you, go to www.b2xsystem.com right now, because everybody exits. The only question is how. What, based on at any given time, the economy is doing one thing or the other, right? What do you see coming? How do you see the market now? And what do you see coming down the road in the coming months, the next 12, let's say, to 18 months?
I think I see that we have a great market. I think that this has been an interesting presidency, right? Not to get political. I don't think I've ever seen this much happen in such a short period of time that's drastically different than what we've ever seen before. Yeah. And so I think in the beginning part of this, there's just a lot of uncertainty. The market in general, just uncertainty, just wildly going one direction or the other based on actions that are taking place. I think we're starting to see all of that calm down, and I think that what we're going to see is once we get an idea of some of these changes that have been made regarding like tariffs and how that will affect inflation, we're all hoping that the Fed will do what we think they will do, which is potentially have multiple rate cuts
Yeah.
this year, which I think very well could happen. And that's a big deal because, when we see these rate cuts, it makes the cost to acquire the capital that we need, whether on a consumer to buy a home or on the business side to get a business loan. We see that the cost of that drops, and then it becomes way more obtainable to get capital. So I think in the short term, over the next 12 months, that's something I think is going to happen. I think you're going to see rate cuts as everybody gets more comfortable and understands the world's not going to end because we're seeing these drastic changes. And then the cost to acquire capital gets less. And then you're going to see a pretty significant increase in demand of people out there applying to get capital. And I think some of those capital markets will open up more, making it even easier for us to be able to tap in and get the money that we need.
Yeah, I agree with you almost word for word on what we're seeing and the way that we view things. And people getting their house in order. We've been saying this now for the last 12 months because we kind of knew some of the things that were going to happen, some of the volatility, but we're really and this goes for really the next, I think, 5 years. There's a lot of money in the private equity world searching for businesses. There's a lot of money. It's called dry powder, and it's not dry powder because they decided that they wanted to have a bank full of, of money sitting around. It's getting it deployed. And how it gets deployed is into businesses that are structured in those 4 areas that we talked about earlier to be a solid place for them to put that money. And I think that money's going to get, like you said, it's going to get easier. It's going to become cheaper. Innovation's going to grow. You've got AI now that is going to help production and productivity explode. There's all kinds of amazing things, I think, on the forefront. But this is one area where you should reach out to Ty and get your shit together, and get your ducks in a row, have the conversations, and start switching, and one step at a time. It's always as a business owner, because we know we have a million things going, but it's one step at a time. This is one that I think is crucial, and it will have future ramifications in the positive column for your business for years and years to come. So I love that. I love that, brother. So much value, so much help. Let me, I want to ask a couple of questions that I'm always curious about for people that are in the financial world. What's the best piece? Like, you go back in your history, and I think about the best piece of financial advice I ever got. What's the best piece of financial advice you ever got?
That's a tough one, but I can tell you in the business world, because there's been a lot, you get money when you don't need it, and it's just about preparation and being prepared. And you hit on this with the economic shifts. The economy is always going to change, right? It's cyclical. Yeah. We're going to see that. And every time that happens, there's just significant opportunities. And every time we hear about the people that are ready to take advantage of those opportunities, right? Every single time. And so you have to just keep that in mind. And I think if you have the foresight to kind of get an idea, and you're following somebody like you on your show, and you get an idea of what's to come and what the future is like, maybe you'd be right or wrong, but if you are staying ahead of that and you're prepared, I think that is really it. And when it comes to my world there, it really comes down to getting money before you need it. Like, if you can get credit lines, if you can get any type of working capital that's not a loan that has to be paid back right now or pay interest right now, but credit cards, credit lines, get yourself prepared for those opportunities. Because I think one of the best pieces of advice I've ever got is that success happens when preparation meets opportunity. And you're going to have those opportunities, but if you have to be prepared to take advantage of them, because those are the people that have the biggest wins. So just be prepared for those opportunities. Have the foresight to see what's ahead. Get money before you need it, especially if it's revolving credit. All of that kind of ties into probably one of the best pieces of advice I've ever seen.
Awesome. Let's say you lose everything tomorrow. What do you do over the next year to start building back?
Well, for me, I think you have to find out what you love to do, and that to me, because, being an entrepreneur is hard. Like, you have to be 100% all in. So I'm going to figure out exactly what it is that is my greatest passion. And for me, with my skill set, I'm going to go out and start building business credit right away. I'm going to start going in and getting the capital that I need right away. And then using that to basically map out a plan to be able to grow a business, especially AI. I mean, today, I wouldn't even touch a new business if it wasn't 80% driven based on AI. And that's exactly what I would be doing. I'd be building it from scratch with AI. I mean, I would actually be getting trademarks on a lot of the stuff that I'm doing right now, and patents on a lot of the stuff that you can be able to do. I think from what I'm seeing, if I was in that place and I'm building it from scratch, it would be one of the easiest and fastest ways to be able to build a successful business that has a high value.
I love that. I love that. What's there's always in every industry, right? There's always kind of like this, this it's like a persistent myth almost. Like I think about bodybuilding and I think about all of the shifts in bodybuilding and lifting and all that kind of stuff that has changed over time. What do you think in your industry? What do you think one of the most persistent, damaging myths that sticks with business credit and financing for businesses and stuff? What do you think? What's one of the biggest myths that just kind of sticks around that people need to know? Don't listen to that. Go do this other thing.
I think there's a couple. I think one is that it's really difficult for startups to get capital, and there's a tremendous amount of options for startups to get capital. They're just typically looking down the cash flow road when they don't have cash flow, and that prevents them getting, shuts them down where they believe that it's not possible. But startups can get capital. You just have to focus on the collateral or credit side of things. And know that you don't have cash flow. That's where a lot of business financing lies, and you can't go trying to pursue that kind of money. And another is that a lot of people still believe that business credit and business credit scores are really linked to consumer credit. So a lot of people think that to get a $50,000 Visa card or even $30,000 at Amazon or $20K at Best Buy, that it ties into your consumer credit. And it needs personal guarantees and credit checks. And it's just absolutely not true. If you're following a series of steps, by the way, the same steps, Jason, the biggest companies that exist actually follow. If you read Sam Walton's book about the founding of Walmart, he talks about Dun & Bradstreet and sitting in the very beginning of the business, knowing they were going back in the back room to pull his D&B profile to come out and give him the initial credit that he needed. So these businesses have all followed the same series of steps to get to where they are. And the reason Michael Dell is not providing credit checks and guarantees, and it's not because he's Michael Dell, it's because they have those established credit reports, but they don't need to. So just know that your consumer credit, commercial credit are two separate things completely, and you could build and acquire all of the commercial credit that you want to get without personal guarantees and credit checks. Don't get me wrong in that. A lot of loans like SBA loans are going to require credit checks. They're going to require guarantees. But especially when it comes to revolving credits and especially credit cards, it's just not linked to your personal credit. You can acquire all of that regardless of personal credit quality and really without personal credit checks.
Wow. Valuable stuff, brother. I appreciate it. Anything that I didn't ask that I should have? Any parting shots you want to give to the people watching today?
We've got a great guide. It's been downloaded over 1 million times that breaks down business credit building. And, that actually gives you the next steps. So we talked about setting up the business where it's credible and building that initial business credit. So if they're interested in getting fuel cards and getting credit at almost every major retailer and Visa cards, MasterCards, auto financing without the guarantees and credit checks, we've got that at creditsuite.com/EIN. 100% free guide, and it really maps out, gives you the specific credit sources you can use, everything you'll need to actually be successful.
I love that. Thank you, brother. I really appreciate it. Thanks for joining us and spreading that wisdom and letting people know. Couldn't think of anybody better, especially after our conversation. And, as I do before I ever go on anybody's show, I always do background and I want to see, who is it that we're associating with. And that's why I wanted you on the show, and you did not disappoint. So please go follow this man, find him on the socials. Are you on how should they follow you on socials, or what's the best way for them to catch you?
If you go to creditsuite.com, right there at the top right of our website, all of our social links are right there. And you can always just search Credit Suite or search my name, and you'll have abundance, a treasure trove of information out there. But the website is the easiest place to go, so you can connect with us on social. All of our links there.
Awesome. Love that. It'll be here when this goes live. It'll be nice and fancy. It'll flash your website right there, so it'll be easy to find. But thanks for your time today, brother. Highly recommend this man. Highly recommend his business. Go check him out. Get your business credit worthy. It's the same steps that we talk about when you're getting your business financially, transparently prepared in your data room for that people are going to ask for due diligence. It's the same thing. This is one of those steps that you can take your multiple up. You can be like side by side with another business and make yourself shine to where people will pay for you, be fighting over you, and be paying you that extra multiple, which is what we want for you as the business owner. So thanks a lot for being with us. I'm Jason Sisneros for Built to Exit, the Built to Exit podcast, and we will see you on the next episode. We're live every Saturday, as you know, 9 a.m. On all of your favorite channels, and we love to see you every single Saturday. And then these special events, they'll be posted up on YouTube, and you can find them at builttoexit.biz as well. Thank you so much for following us. Thank you so much for sharing this. Thank you so much for everybody standing up for the small and mid-sized business owners these days. That is how freedom will continue. That is how opportunity will continue, not only for us, but our children and our grandchildren. I appreciate you all being in the fight. God bless.